So in today's video, I want to talk about how I made over $2,000 in 24 hours. I'm going to go over the trade and just talk about my thought process, and hopefully this can help you find good opportunities in the future. And at the end of the video, I'm going to talk about where I think the market could potentially be at the end of the year and some things that you should look out for. So I value your time. With that being said, let's get right into it. All right, so the stock that I made a trade on was JP Morgan. So everybody knows JP Morgan, right? The biggest bank in America and probably one of the biggest banks in the world, right? They make a lot of money, really successful bank. Basically, JP Morgan had earnings report this week, and they had overall an amazing earnings report. And this is where I kind of found that opportunity, right? So let's go over the earnings report and talk about some of the key highlights that we saw. So net income was $42.4 billion, up 12% from the prior year. EPS 5.07, right? Beat analyst consensus estimates. Managed revenue $47.1 billion, up 9% year over year. ROTCE 20%. And then some notable segment performance. Investment banking fees increased. Right, overall things were well in that sector of the company. CCB, strong performance in credit card business. AWM, record revenue driven by growth in management fees. On top of this, the company also raised their guidance and future outlook, right? Basically telling investors that they plan to make more money in the foreseeable future. So as an investor in any stock, this is as good as it gets, right? You have a company that came out with really good earnings report, right? Showing strong strength within their business model. On top of this, they're telling their investors that they plan to make more money in the foreseeable future, right? So this is going to gain a lot of positive sentiment within the stock. Investors are going to be confident buying this stock, which will drive the price up longer in the long term, right? Because it's good justification behind it. So whenever this happened, JP Morgan stock actually tanked the following morning, right? So at one point, the stock came all the way down to like the low 290s, and it was down like 45% a day after having extremely good earnings report. So I basically saw this as an asymmetrical bet, right? You have a company, good earnings report, raise their guidance, right? Telling investors they plan to make more money, and the stock drops like 4% in a day. So I didn't catch the bottom exactly, nor do I ever try to catch the bottom exactly. But once I saw the stock down like 3 to 4%, I got in around that 295 to 296 range, which is when I bought Leap options, right? I had some options expiring in 2027 and late 2026 to give myself a lot of time for things to play out. And basically the next day, right, the stock rebounded and went back up. So now it's kind of fluctuating again, but this kind of shows that this was kind of an overreaction from the stock, right? And it had a quick rebound going all the way back up. So on top of this, JP Morgan was still significantly down from its previous all-time high, which was around that 317 range, right? So seeing the stock drop down 4% after having good earnings support, and also knowing that it's significantly down from its all-time high, it makes sense for me to make a bet, right, and give myself a lot of time for things to play out, which is about long-dated call options, you know, to let the market do its thing and just give myself time for things to come together. All right, so I hope that makes sense to y'all. So this isn't me saying that this is going to work out 100% of the time, every single time, right? Just because a company has a good earnings report, does not mean the stock is going to shoot up automatically the next day. But what I'm trying to say is that most of the time, from what I've seen, when you have a company that's down significantly from its previous all-time high or down a little bit from its all-time high, it comes out with great earnings report, raises guidance, right? Basically telling the market that they plan to make more money in the foreseeable future, justifying, you know, the price increase in the future. And then the stock has a massive drop, has a massive overreaction. More than likely, if you buy that stock, right, or buy long-dated call options, or giving yourself a lot of time for things to play out, within the next couple of days, couple of weeks, couple of months, however long it takes, that stock will eventually find its way back up. Because the market can be really irrational in the short term, but in the long term, the market is really good at pricing companies to their true evaluation. So I hope this makes sense to y'all, right? Doesn't mean that I was going to be right. I could have been completely wrong, but I made a bet because it makes sense to me at that time. So with all that being said, I want to talk about where I think the market could be at the end of the year and some things that you should look out for as an investor. All right, so taking a look at the overall market, you guys can see that the month of October has been pretty flat, right? The market has just been fluctuating so far this whole entire month, right? But we go back a little further. Let's go year to date, right? You guys can basically see we've been in a huge bull market since the bottom of the whole entire tariff fear situation that happened back in April, right? The market has basically just aggressively been going straight up, right? This is primarily because a lot of companies, AI-related companies, had good earnings report, right? Companies were reporting strong growth, right, and good future outlook. And the market was also extremely oversold, right? So we've basically been going up damn near straight up for like 6 months, right? Basically free money, right? Hindsight, right? Of course, nobody knows what the future holds, but basically free money for 6 months. So the market, to me, is exhausted. I mean, we've gone up so much for so long. And you guys can see whenever we had this massive crash right here, right? This is when Trump announced that he was going to do 100% tariffs on China. I think everybody knows that Trump's tariff threats, it's all bullshit, right? It's all bullshit. But I think the reason why the stock market dropped so much, right, is because we've gone up so much so aggressively. The market was looking for any type of reason, any type of justification to have a massive sell-off. And that's exactly what happened, right? But now, as you can see, the market has slowly started to recover a little bit. But I'm still bullish long term. Even though we've gone up so much already, I still think the market has a lot of room to grow. And I want to show you guys why I think this. So one of the first reasons why I think the market still has a lot of room to grow is because we have a high probability of seeing 2 more rate cuts, right? 2 more interest rate cuts before the year is over with. So we look at the next FOMC meeting that's going to happen October 29th, right? The market is basically telling us it's a 99% chance we may see a 25 basis point rate cuts, right? So right now the Fed fund rate is at 4% to 4.25%, and the Federal Reserve may cut it down to 3.75 to 4%, right? So on top of this, if we look at the next FOMC meeting that's going to happen beginning December, the market is pricing in a 94% chance that we're going to see another rate cut, right? So 2 more rate cuts. As you guys know, the market loves rate cuts, right? It makes it easier for people to borrow money, makes it easier for companies to borrow money, take on more loans, to take on more projects, right? Overall, it makes it easier to get money, right? People have a higher risk appetite. So the next thing that I want to talk about is the fact that the Federal Reserve may stop quantitative tightening and start doing quantitative easing, right? So we read the title of this article. It says, Fed Powell suggests tightening program could end soon, open doors to rate cuts, right? I don't want to go over this whole entire article, but a statement that I want to read over is right here. Federal Reserve Chair Jerome Powell on Tuesday suggests the central bank is nearing the point where it will stop reducing the size of its bond holdings and provide a few hints that more interest rate cuts are in the cards, right? So basically, right now, the Federal Reserve, they're at a point where they're doing quantitative tightening. So what this means is that they're basically selling off a lot of their assets, right? Selling off a lot of treasuries, right? Which is basically taking away more money from the economy, right? But now with the Federal Reserve signifying that they may start doing quantitative easing, this means that they'll go out there in the bond market, right, and start buying bonds again, right? This is going to provide more cash to the economy, more cash to banks, right, and help lower interest rates. And the market loves to see quantitative easing. So if you guys remember during COVID, one way that the Federal Reserve helped the economy out was by doing quantitative easing, right? They went out to the bond market, bought a lot of treasuries, bought a lot of bonds, and provided a lot of cash and liquidity to the economy. And the last reason why I'm still bullish is something that you guys should really be on the lookout for is the earnings report for some of the bigger companies, especially the ones related to AI, right? This is really important because this is going to tell investors if that this AI bubble is about to pop, right? Or whether or not, we still have a lot of room to grow in the foreseeable future, right? So what we saw this Thursday or Friday, I can't remember, but TSMC, right? One of the big players in this AI, this huge AI run-up that we've had, right? So they make the chips, they manufacture the chips. They had amazing earnings report, record-breaking earnings report, and they raised their guidance and future outlook. As an investor, this is a good sign that this whole AI bubble is not going to pop yet, right? And it still potentially has a lot of room to grow. But we still have a lot of big players that have earnings report at the end of this month and next month, right? So you got NVIDIA, Microsoft has had earnings report. A lot of these top 7 companies, right? They have not had earnings report. But big ones that you want to look out for is NVIDIA and Broadcom, right? If they come out and say, they've had amazing earnings report, they're raising their future guidance and outlook, right? This is going to give a lot of investors confidence to keep on buying into the stock market, because they don't believe that the AI bubble is popped yet and there's still a lot of room to grow. So you really want to keep an eye on the earnings report. Make sure that these companies are reporting good earnings to kind of, signify that we still have a lot of growth to see in the foreseeable future. So I hope this made a lot of sense to y'all. I'm personally betting pretty big on Bitcoin and a lot of other AI companies to have a good run up before the year is over with, right? Because of the fact that we're going to have potentially 2 interest rate cuts, on top of the fact that we may see quantitative easing, on top of the fact that, if all these AI-related companies, the top companies in the world, right, start having good earnings support, it's going to drive investors to be confident to keep on buying to the stock market. At the end of the day, I could be completely wrong. I cannot predict the future. Nobody knows 100% of the time what's going to happen, right? Which is why it's so important to do your own due diligence and make sure it makes sense to you, right? Make sure you do your own research and make sure you take your time and put in money that you're willing to lose. So I hope this video helps somebody out. Let me know what stocks you guys are looking forward to getting into. Make sure you like, comment, subscribe, and I'll see you guys in the next one.